Applied Digital, also known as APLD, is trending sharply after reporting better than expected earnings, which highlighted strong revenue growth and a clearer pathway toward profitability. Investors reacted positively to improving margins, rising utilization across its AI data center portfolio, and management's confident outlook, all of which reinforced the view that Applied Digital is transitioning from a build-out phase into a monetization and scaling phase. Fueling the bullish momentum further, the company disclosed that it is in advanced negotiations for three additional large scale data center sites, totaling approximately 900 megawatts of capacity, all tied to a single investment grade hyperscaler. If finalized, these agreements would represent a transformative expansion of Applied Digital's AI infrastructure footprint and materially increase its backlog of contracted revenue. Hyperscaler leases strengthen long term outlook. Applied Digital's growth has been increasingly underpinned by large, long duration leasing agreements with hyperscalers, providing long term revenue visibility and reducing demand risk. Most notably, the company recently secured a $5 billion lease agreement with a US based hyperscaler, covering 200 megawatts of capacity at its Polaris Forge 2 campus in North Dakota. This deal adds to existing hyperscaler leases already in place at Polaris Forge 1, meaning Applied Digital now has contracts with two hyperscalers across both campuses. Combined, the company's existing hyperscaler agreements are expected to generate approximately $16 billion in lease revenue over their contractual terms, excluding any potential renewal options, a figure that has caught the attention of both institutional investors and retail traders alike. Chief Executive Officer Wes Cummins emphasized the strategic advantages of North Dakota as a hyperscale destination, citing the region's cool climate, abundant and reliable energy supply, and favorable economics. He also highlighted Applied Digital's growing track record in delivering technically complex, high density AI data center projects, positioning the company as a trusted and scalable partner for hyperscale customers with demanding compute requirements. Within the trading community, discussion is increasingly centered on the possibility that Applied Digital could double its contracted revenue base if additional hyperscaler negotiations convert into signed leases. Many investors see the company evolving into a core AI infrastructure utility, supplying mission critical capacity to the largest players in artificial intelligence. This narrative has fueled growing bullish sentiment, along with speculation that continued operational execution and contract announcements could apply significant pressure on short positions, particularly as the company's financial profile strengthens and visibility improves.
So the stock is up 5.28%. This is Thursday, the 8th of January 2026. Intraday high yesterday, $32.28. Okay, let's see what the volumes are saying so far in this session. This is the pre-market session. Okay, so 594,000 shares across the tape. You can see this, it's a high beta stock and also one of the most heavily shorted. As things now right now, um, the market is not that liquid for the stock, but it doesn't matter that much. It doesn't really matter that much. I think then people they're not bothered that they're not really that bothered about the high spread, relatively high spread. You want a you want a spread of only 1 cent, but here we're looking at a spread of 4 cents between the ask and the bid. But I don't think they are worried about that. You know, the underlying trend still remains strongly bullish. Okay, before now, the extrapolation seems to be suggesting that we are going to see it was going to be a down day today, but things have changed. Okay, we'll just read the projections here. It's saying beginning from the least, we have 5.47, 9.76, 16.7, and then upper projections of 37.79 for the 3.84 for the 7.58. Let's see what the active 4-hour chart is indicating. Okay, the extrapolation on this 4-hour chart seems to be suggesting as well that it's going to contract. Let's see now, did it pick up a bounce? Let's see, it's been showing a lot of strength since the 29th of December. Yeah, so it's been, and then it's been in a bullish short-term trend within a longer-term bullish trend. Okay, so here it's saying that it might just hold the strength up till the pre-market session. Then after that, it may go into a contraction, just as the daily chart is actually suggesting. This 4-hour chart seems to be suggesting the same as well. So, but in the interim, between now and the 12th, okay, let's say between now and Monday the 12th, the stock is expected to trade within this tight space. So it's yeah, a contraction surely is what is expected. Yeah, as it continues to decline, expect more momentum to continue to decay. That's what we're also seeing here as well. But it's saying that it might pick up a bounce from Tuesday, um, somewhat aligning with the pattern we have noticed when stocks retrace towards their 40-day moving average. For 40 period moving average, it tends to provide a buy the dip opportunity. Okay, here we have, let's see, 29.15 is the upper projection now. The stock is at 31.16. So let's just quickly glance at its 1 hour chart to see what it's extrapolating. There's a chance it may have a different alignment. Here as well on the 1 hour chart, it's contraction that is expected. Yeah. And yeah, it's not expecting a bounce when it approaches its 40 period moving average. Could it be because the 40 period moving average is trading at it's not trading at a significant discount to it, or okay, it may not be that. Yeah, okay, we'll see. Let's see now. What we could do is also apply the market grid. It might give us a range of possible prices. Let's see what the market grid is going to give us. Yeah, okay. Let's see down here. Yeah, we have between 32.04 and 34.54. So that is with okay. We remember we have this intraday high of 32.28. So yeah, and it's pointing down. So currently at 30.91. So it is right in the support zone. So expect lower prices, just as the extrapolations are indicating, and even expect lower prices lower than 30.54, which is the base of this grid. Let's have a look at the 4-hour chart to see what it's going to indicate. What we have between 32.77, that's in line with yeah, this intraday high, 32.77, and the stock is it's I think it's still pointing upwards. So 32 points, it's currently at that $31. So yeah, okay, this is where it is. It is in between the resistance and the supports. Okay, here we have some what looks like a misalignment on this 4-hour chart. It's indicating that it may well hold, or even strengthen. It may well hold the strength. May try to defy the extrapolation that is saying that it might go down. Yeah. So, but if it does go down, remember we saw on the 1 hour chart, $30 and some fraction. If you add this to what we already saw, this is we have already seen. So these are the sort of lows that can print as well, all the way down to 28.56. So in essence, you could say that this the market grid on this 4 hour chart further enhances what we have on the 1 hour chart. So lower prices possible all the way down to 28.56, but higher prices all the way towards 32.77, pretty much possible. This is a more enhanced chart, given that it's a lot slower. Yeah, it can. They both have their needs. They both meet certain needs. Yeah. Okay, so that's what's going on right now. See what you make of APLD, and thank you very much for watching this video.